This is the Royal Financial Investment Group. As always, this is Prince Dykes here, your host. Today's video is going to be, I want to throw a disclaimer out there first. I'm not recommending you do this or telling anybody to do this. I'm just going to share with you something that you can take on board and that you can use to figure out how you want to do things. I'm just sharing my personal experience. But today's video is going to be why I sold all of my mutual funds. And I'm going to show you guys why I did that with etrade, right? So I don't have a lot of time. I definitely know you guys don't have a lot of time. So let's jump straight into it. I'm trying to keep this under 5 minutes. I'm see can I do it this time. But anyway, why I sold all my funds with etrade. Now right here, what I have pulled up is the mutual. You go to research, you go to products, you go to mutual funds, right? So let's say if you're branded to invest in, people are going to say, hey, go get a growth mutual fund for your kids or whatever the heck, right? So let's look at it. What I'm going to do is I'm going to select all groups, all fund families, and we're going to go down here. We're going to go to growth. Let's see, can we find? Okay, large growth, large cap growth, right? Hey, I want this to grow to the maximum ability, right? So a lot of people use Morningstar. A lot of people use Morningstar 5-star rating because Morningstar is a place that goes out and rates mutual funds, and people usually say, okay, well, it has a 5-star rate, so guess what? It must be good. It's for growth. I'm just going to put it here for little Timmy or whatever, blah blah. Add it to my portfolio for growth for 10 to 20 years from now, right? And then it says you have 18 matches. So we're going to take a look at these 18 matches. And I'm going to show you guys what I learned over time, right? So this is the first one that pops up. It's just in alphabetical order, nothing strange why it's popped up or whatever. So I'm just going to take a look at it. Boom. So this is the particular company, right? Just a random mutual fund. I'm not going to look too deep into it. It's a large cap growth mutual fund, right? So I'm going to take a look at the charts. And this is a cool feature that you can use as well with etrade, is you can compare things, right? So you're going to look at so now that we have it up, we're going to pull it out to the max. Let's see, we don't want to look at over a year or whatever, right? So this is going all the way back to 1998, all the way to present day. And what I'm going to do is I'm going to compare it to the Dow Jones. I'm going to put the Dow Jones on there. You guys see how I did that? Just click upper comparison, Dow Jones, right? And when you look at this thing, compared to the Dow Jones, which one has outperformed? It doesn't take a rocket science to see. This is the Dow Jones, the yellow up here, and this is the this mutual fund, this large growth mutual fund, right? It's pretty obvious to see that. It's pretty safe to say, hey, the Dow Jones outperformed it. Hey, cool, whatever, right? Now, even when it fell off dramatically here back in 1998, the Dow Jones still was, doing better than it, right? Now, this is the second catch. When I look at something like this, I say, hey, well, why would I get a mutual fund when I can just sit back and just get an ETF and track the Dow Jones? Because the Dow Jones keeps the top 30 mutual fund, not top 30 mutual fund, the top 30 companies domestic in the United States, right? Which is your Apples, Verizon, 3M, stuff like that, right? Things that are inside the Dow Jones. So I'm like, hey, well, if I would have just tracked the Dow Jones, I would have been way better off. First of all, I would have made more money. Second of all, this is the second thing what a lot of people don't pay attention to is under this mutual funds, fees and expenses. When you look at fees and expenses on the mutual funds, you got to think about it, right? A mutual fund is pretty much a bunch of financial people, financial advisors, and stuff, financial advisor, investment advisor representatives that sit down and they're moving your money around. They are actively managing it. They're moving your money around, buying stock, selling stock, whatever they're doing in this mutual fund to keep up with the overall objective of it, which is to make money, right? But since they're doing all this, they have to make a living, so they charge you. So when you look at this one, let's take a look at the fees that are associated with it, right? The expenses 2% expense ratio, right? Look at this. It's a 2% expense ratio. And also, when you have this expense, this money is taken from you. So you put your money into this. regardless of this stock does, not this stock, but this mutual fund does well, regardless of it decline, regardless of the performance, you're taking all the risk, you're putting all your money into it, you're taking all the risk, and you're getting charged regardless. If it stays flat, it declines, you're going to pay yearly. It's taking money out of your pocket yearly, right? So it's like, well, so you're taking money out of my pocket, you're not beating the stock market, so I'm losing money two ways. I might as well chase the stock market then, right? Now this is the crazy. Now the cool thing about this one, I think it's in this one. Some of them pay dividends, which could be alright, that may offset it a little bit. But overall objective, what I'm looking at is that, hey, you're charging me 2%, and you're not even beating the stock market. And I'm sad to say you can go here and check any mutual fund that you have, compare it with the Dow Jones, the S&P 500, which are our benchmarks. I just showed you guys how to do it on eTrade. Compare it and sit back and look at it and say, is this even beating the market? Has it been beating the market? Now, another thing you got to take into consideration is I'm going to look at DIA. This is an ET. Yeah, I typed that in right. So DIA is a ETF that tracks the Dow Jones, right? So since it's tracking the Dow Jones, you're going to see, we're going to look at the expense ratio of the DIA. You just can go down, just scroll down here a little bit. It's 0.17. We just tell you that this large growth mutual fund was 2%. This is 0.17. Plus, it's paying a 2.55%, and it's beating 90% of the mutual funds that are out there. That's the reason why I sold all my mutual funds. But anyway, don't forget to like, subscribe, comment, and share. Let's have your thoughts about it or whatever. I'm not telling you guys what to do. I'm just bringing them to your attention and giving you guys my view of it. And this is the reason why I just, with this particular thing, instead of buying a mutual funds, I just pretty much track the indexes. ETFs or buy index fund. But anyway, till the next video, you guys already know what to do. Be safe.